Grey market stock trading in the UK, opportunities, challenges, and regulatory perspectives. 1 vote. Introduction. Grey market stock trading, also known as parallel trading or over-the-counter trading, has gained prominence in the financial markets globally, including the United Kingdom. In contrast to traditional stock exchanges, grey market trading involves the buying and selling of securities directly between parties without the involvement of a centralized exchange. This essay explores the dynamics of grey market stock trading in the UK, examining the opportunities it presents, the challenges it poses, and the regulatory framework governing this alternative form of trading. Historical context of grey market trading in the UK. To understand the current landscape of grey market stock trading in the UK, it is essential to delve into its historical roots. Over-the-counter trading has existed for centuries, with informal markets facilitating the exchange of securities. In the UK, the evolution of grey market trading can be traced back to the emergence of unregulated markets where traders engaged in direct transactions. However, with the formalization of traditional stock exchanges, grey market trading took a back seat, only to re-emerge in contemporary financial landscapes. 2 opportunities in grey market stock trading. Accessibility and flexibility. One of the primary attractions of grey market trading lies in its accessibility and flexibility. Unlike traditional exchanges that operate during specific hours, grey market trading allows participants to engage in transactions at any time. This flexibility caters to a diverse range of traders, from individuals to institutional investors, facilitating a more inclusive market environment. Innovation and emerging companies. Grey market trading often serves as a platform for the trading of securities of emerging companies or those that are not yet listed on formal exchanges. This provides investors with an opportunity to participate in the early stages of a company's growth, potentially yielding higher returns. Additionally, the absence of stringent listing requirements on the grey market allows for more innovation and risk-taking. Advertisement. Privacy settings. See arbitrage opportunities. Grey market trading can create arbitrage opportunities for astute investors. Price disparities between the grey market and the formal exchange can arise due to various factors, including information asymmetry and market sentiment. Traders can capitalize on these discrepancies by buying or selling securities in the grey market and later adjusting their positions on the formal exchange when prices align. 3 challenges in grey market stock trading. A lack of transparency. One of the key challenges associated with grey market trading is the lack of transparency compared to formal exchanges. The absence of a centralized platform makes it challenging to obtain real-time information on prices, volumes, and market depth. This opacity can lead to inefficiencies and increased risks for participants. Counterparty risks. Grey market trading involves direct transactions between buyers and sellers, exposing participants to counterparty risks. Unlike formal exchanges that act as intermediaries and provide a clearinghouse function, grey market transactions lack the same level of risk mitigation. In the event of a default by one party, the other may face difficulties in recovering losses. See regulatory ambiguity. The regulatory landscape surrounding grey market trading in the UK is characterised by ambiguity and varying interpretations. The absence of a standardized framework leaves room for legal and regulatory uncertainties, making it challenging for market participants to navigate and comply with the rules. This lack of clarity can deter institutional investors and hinder the overall development of the grey market. 4. Regulatory framework for grey market trading in the UK. A Financial Conduct Authority, FCA, oversight. The Financial Conduct Authority, FCA, plays a crucial role in overseeing financial markets in the UK, including grey market trading. While the FCA does not explicitly regulate grey market activities, its general regulatory principles and guidelines apply to ensure fair and transparent markets. Market participants engaging in grey market trading must adhere to these principles to maintain market integrity and protect investors. B. Compliance with market abuse regulations. Market abuse regulations are instrumental in preventing and detecting market manipulation and insider trading. Grey market participants must comply with these regulations to safeguard the integrity of the financial markets. The FCA actively monitors and enforces these rules to maintain a level playing field for all market participants. See investor protection measures. In recognizing the unique risks associated with grey market trading, the FCA emphasizes investor protection measures. This includes ensuring that investors receive adequate information about the risks involved in grey market transactions. The FCA also encourages market participants to adopt best practices to enhance transparency and disclosure. V. Case studies and notable examples. A London Stock Exchange's AIM market. The Alternative Investment Market, AIM, of the London Stock Exchange is a notable example of a regulated platform that caters to smaller and growing companies. While not a traditional grey market, AIM shares some characteristics with grey market trading, such as reduced listing requirements and increased flexibility. AIM provides a regulated environment that seeks to balance innovation with investor protection. B. Grey market trading platforms. Several online platforms facilitate grey market trading by connecting buyers and sellers directly. These platforms often operate independently of formal exchanges and provide an avenue for trading unlisted securities. Case studies of such platforms can shed light on the challenges and successes of grey market trading in the UK. 6. Future trends and prospects. A. Integration of technology. Advancements in financial technology, fintech, are likely to impact the landscape of grey market trading in the UK. The integration of blockchain technology, for instance, could enhance transparency and streamline settlement processes. Robust technological solutions may address some of the current challenges, making grey market trading more efficient and secure. B. Evolving regulatory landscape. The regulatory framework for grey market trading is expected to evolve as regulators adapt to the changing dynamics of financial markets. Clarity and specificity in regulations governing grey market activities could attract more institutional investors and contribute to the growth of this alternative trading space. See globalization of grey market trading. As financial markets become increasingly interconnected, the globalization of grey market trading is a conceivable trend. Cross-border trading platforms and international cooperation among regulators may facilitate the expansion of grey market activities beyond national boundaries. 7. Conclusion. Grey market stock trading in the UK represents a dynamic and evolving facet of the financial markets. While it offers unique opportunities for investors, challenges such as lack of transparency, counterparty risks, and regulatory ambiguity must be addressed to foster a robust and sustainable trading environment. The regulatory framework, particularly overseen by the FCA, plays a crucial role in balancing innovation with investor protection. As technology continues to shape the financial landscape, the future of grey market trading in the UK holds promise, provided that regulatory frameworks and market practices adapt to ensure the integrity and efficiency of these alternative trading platforms.